we've come to the end of the Business and Markets Week. It's also the last Friday in the month of July, and this is the final weekend of the month. So we're done by next week, Thursday, the first month in the third quarter. Welcome to the show, everyone. Your Frontier Opening Bell. The Nigerian market sank further, roughly 0.25% on a Thursday, led by big banks, Zenith Bank, UBA, Access Corp, FBN Holdings, Fidelity Bank, Jitco, and others. Of course, got a few names in the consumer goods adding to the meltdown that we saw, 118 billion naira off the market's book value. That's the trading day as the market in Nigeria reacts to the interest rate hike of 50 basis points on Tuesday and the announcement by the parliament to take 70% off the profits that the banks made on FX devaluation for last year. The whole conversation still out there. Moody's warning Nigeria of the consequences of that 70% FX windfall tax if it's implemented. There's a whole lot of other angst against that as well. It's a very tough situation right now in Nigeria. The Naira fell yesterday more than 1% against the US dollar, taking the official window Naira dollar exchange rate to 1,605. That's the lowest since the month of March. Nail-biting period. We'll get more about that in West Africa, a briefing later. The BRVM in Cote d'Ivoire softened by 0.06%. The Ghana stock market remained very bullish to the upside on the latest mid-year budget review, which restates the country's economic growth outlook for this year to 3.1% from 2.8% previous. Take that down to Egypt, where the markets closed Thursday. That's the Wednesday's closing figure, 29,090 on the EGX. Let's see how the markets will reopen on Sunday in Cairo. The Nairobi stock market continued its decline 1%, roughly off the NSE all-share index at 105.57, while the GSE climbed just 0.1%, helped by industrials and the financials. The resources names on the GSE remain in the water on Thursday. The big names traded include First Round, more than 10 million shares of that stock was traded on Thursday. And of course, you got other names outside the banking and financial services. Let's just leave it there as far as the markets. Let's step into East Africa and grab a couple of headlines as we go into the weekend. But the big picture is the World Hunger Reports, or what the food reports released by a UN agency, warning that not much progress is being made to provide food on a sustainable basis globally. The number of people who goes to bed or malnourished or undernourished is climbing at least 3 straight years. No much progress is being made. And that's the story for everyone, wherever you are around the world. In the meantime, Safaricom shareholders have approved a gross cash dividend of 26.05 billion shillings. And that's the headline figure for the year. Company's financial year, by the way. The payable August 31st, by the way, to shareholders. Access Bank of Kenya has opened a new branch around Eastleigh. There was a shopping mall there around that place where in Nairobi where the new branch is being opened. You want to check that out. Elsewhere, Electric of Egypt, listed on the Egyptian stock market, says it's adding 705 megawatts to Tanzania's power grid, while Kenya is reopening a 6.5% and 17-year infrastructure bonds. The idea is to grab as much as 50 billion shillings in subscriptions from investors. And an IMF meeting to approve a new loan for Ethiopia. The board of directors of the board of IMF is scheduled to meet next week. That's according to Bloomberg, to consider a new funding support for Ethiopia. Great. Let's check on with West Africa, by the way, with, of course, Nigeria in the news. It's been a couple of years since Oando, Nigeria, listed company has been bidding to buy the 100% onshore assets of Italian Energy ENI's subsidiary in Nigeria, which is Egypt National Oil Corporation, a company that has now been approved by the NUPRC, the industry regulator. Of course, that will go to President Tinubu for his final signature on that. That's 100% a deal that's been concluded. We still have at least one other deal on the table involving Seplat and another international oil company's energy assets onshore Nigeria's waters. Let's get on with Nigeria's looking now to issue $500 million in dollar-denominated Diaspora fund bond. That is expected to take place over the next couple of weeks, and that's according to the country's finance minister, Wale Edu. The idea is to tap into those multi-billion dollars annual diaspora monies coming into the country and tie them into some form of capital projects, infrastructure, but using the bond papers to attract those effects into the coffers of the central bank and, of course, the Ministry of Finance. Transcorp Hotels, Nigeria's iconic, one of Africa's most iconic hotels, reporting a big 844% jump in revenue for the first quarter, January to March. Hotels such as Transcorp is one of those destinations for both local and international events and has a lot of room occupancy in Abuja as well as a few other locations across the country. In the meantime, Central Group says it's investing about $980 million in Ghana's Tema refinery located in Community 7 in Accra, the country's political and economic capital. And finally, private sector growth is in focus at Liberia's investment conference, and that is scheduled for August 5th to the 8th. Great. Let's see what's moving the needle this Friday in Southern Africa, as the countries, according to Stanley, may have to struggle to hold inflation around 4.5%, which is the target of the SARB. Inflation for June came in on Wednesday at 5.1%, slightly retracing from 5.2% in the previous month. Would that be enough for Leseja Kiangango and the rest of his team to cut interest rates? We'll see what happens over the next few days when the July meeting of the SARB takes place. In the meantime, Anglo-American is taking further fertilizer rate down and sees a coal deal by the year 2025. Still within the region, Zimbabwe's raw milk production hits 50% of its country's annual target, while Zambia's central bank says the de-dollarization of the economy does not mean the return of exchange control, of foreign currency controls in the country. That was a clarification, by the way, from the central bank governor there. Of course, there have been concerns from the IMF and a few other multilateral agencies and institutions whether Zambia is returning to the era of foreign currency controls. And finally, in Southern Africa, Zimbabwe has announced new measures to spur demand for the new currency, the ZiG. That was part of the presentation Wednesday, by the Minister of Finance, Ntuli Dube. We wrap it up in North Africa. Of course, that's where it all ends here on the show. So let's get a few Egypt raising fuel prices or petrol product prices about 15%. The IMF is also considering a new level of funding support, roughly $260 million or so for the President Al-Sisi's administration in Cairo. We'll see how that goes over the next few days. Keep your eye on that. It's part of the measures in which the government is looking to raise revenue locally. So fuel prices, products, it's got to go up. Tunisia, Algeria, and Libya, and this is one great news, moving to set up what we call the Cooperation Council. Actually, there was a meeting of all the confederations of the businesses and chambers of commerce of these three Northern African economies, and they decided to form a single cooperation council, and that is what it is, a handshake across the borders. Tunis Airlines says 2.6% revenue growth was reported in the first quarter, January to March, while Morocco is looking to double jobs in its aeronautics sector by the year 2030. And those are your headlines as we go into the weekend. We thank you, everyone. Hope you had a very great week. I'll see you at the other side of the weekend. Bye for now. I am Bosin Amofaye. Enjoy the show. Once again, on our www.frontafricareports.com. Check our YouTube. It's free. You can subscribe and follow us on across all our social media platforms. Bye for now, everyone.